Hi everyone, I'm John Miller CPA and I'm here for another video. This time we're going to talk about settlements from a lawsuit. Sometimes I have clients come to me and they go, "Hey John, I just got a settlement from a court case that I won. Is the settlement taxable?" And the answer to that question is it depends, because there's several different kinds of settlements that you can get. There are several different kinds of damages out there, and depending on what they are will determine whether or not they're taxable. Probably the most frequent one that I get is, let's say somebody's involved in a car accident and they get a settlement from the insurance company. Now those are compensatory damages or pain and suffering, and those damages are not taxable because basically those are damages to compensate you for a loss. And so it's not really considered to be income because it doesn't make you better off than you were before. In other words, in order to get a settlement, you had to prove that you were damaged, and all that's doing is kind of making you whole. So pain and suffering damages would not be taxable. Now, there are certain kind of damages that could be taxable. For example, punitive damages would be taxable. Now, punitive damages are different than compensatory damages. Let's say somebody deliberately does something to you. Let's say you get into an argument with one of your neighbors and he punches you in the nose. And aside from the fact that he could be criminally prosecuted, you could also sue him for possibly assault and battery. So let's assume that you sue him for battery and you win. And what may happen is, in addition to awarding you pain and suffering damages, they might award you punitive damages. Those are designed to punish the wrongdoer. And those are damages above and beyond what you've suffered. Well, if you get punitive damages, those are taxable. Now, there are some other types of damages that you could get as well. For example, if you had been wrongfully dismissed from a job, and let's say you have a disagreement with your employer over the wages that are due to you, and you sue the employer, and let's say you win a settlement for some back wages, well, those would be taxable because had you received the wages in the first place, they would be taxable. So if you receive them as a result of a settlement, they'll be taxable as well. Then sometimes people might be plaintiffs in a class action suit. This happens often when you invest in a stock that ends up going bankrupt, or sometimes there could be class action suits against banks or credit card companies. Most of the time, you're probably only going to get a small settlement from them, and most of the time that won't be taxable because what you're being reimbursed for is usually like an overcharge of finance charges, or there's possibly some stock that you had that went down to nothing. So usually you've lost a lot more than you possibly would have gained. And so most of the time those damages won't be taxable from a class action suit. But let's say you had invested in a stock and it went belly up and you wrote the whole stock off. And then later on you get a small settlement from the class action suit. Well, at that point you'd have to report that as income because you already wrote the stock off. But most of the time it's small amounts of money, and it's usually not something that I would worry about. So to sum it up, most damages that are to compensate you for a loss are not taxable. But if you have some damages above and beyond what you lost, such as punitive damages, those would be taxable. Alright, well, I appreciate you watching my video as always. And if you have any questions, you can reach me at 770-419-3399, or you can email me at johnmillercpa@gmail.com, or feel free to visit my website, www.incometaxpreparation.com. Thanks for watching, and I will see you in my next video.